Welcome back. I'm Pratap here. Today is the 19th February 2025. In this video, let us evaluate the performance of high liquidity zones generated in our previous report. Even before that, all of you please understand we are providing complete free training on supply demand zone price action. Some of you might be knowing the cost of the training is over 8,000 US dollars. But we are providing complete free training. All the training lessons are available at our NeoStock YouTube channel. So at our channel homepage, click on the tab Posts. Some of you might be seeing the tab Community here. Click on that Community tab. Then you get access to this post. This post is having a YouTube playlist link that will take you to all the training lessons. You just click on the link. Now we are into the playlist Supply Demand Zone Price Action course, and all our training lessons are available here. You just need to start our training from the first lesson, and lesson 1.1 is available at the bottom of the page. Just scroll down to the bottom of the page. Here, starting from lesson 1.1, I kept all the training lessons in an order. So please go through all these lessons one by one according to the training instructions I mentioned at our Telegram channel. I provided the link to our Telegram channel in this video description. Join at our Telegram channel. At the top of the window in the Telegram channel, you can find pinned messages. Click on the pinned messages. There you can find all the training instructions. So please learn this course according to my training instructions. Then you will become a very good independent trader in the coming months. Okay, now let's get into our HLQ zone analysis discussion. Yesterday we identified 1, 2, 3, 4, 5, 6, 7, 8, 9 high liquidity zones from daily and 75 minutes time frame. But unfortunately we did not get any trades today. Maybe couple of trades, looks like you got the trades, but they are from 9:15 1 minute candle. We can't accept them. But I don't know how many of you are using, apart from high liquidity zones, how many of you are using Nifty and Bank Nifty supply demand zone chain. They will also provide you very good trade opportunities. Maybe the success rate is definitely not 80%, but they have a decent success rate. You can expect between 60 to 80% success rate, or maybe 60 to 70% success rate. Especially Nifty, Bank Nifty will be available when you don't find trade opportunities. But today, Nifty gave you trade opportunity in the morning, in the early minutes. The moment market start 9:16 candle itself, it gave you the opportunity. After that, it gave you a very good profit. 1:3 RR it achieved till the 15 minutes target zone. I think 5.3 or 5.6 ROI also it has given. We will calculate. Let me show you. First, let me explain Nifty, how you can make use of Nifty supply demand zone chain. I have a detailed video on Nifty supply demand zone chain in the playlist Nifty, Bank Nifty supply demand zone chain. The old videos I have already explained. But straight away how we can look for the trade opportunity, let me explain. You know that currently we are in the monthly demand zone. Monthly demand zone, the order flows are very strong. You know that. Because that is the buyer's area. So that's why if you look for high liquidity zone in this area, you get a very good trade opportunity. See, this is a 5 minutes, Nifty 5 minutes supply demand zone chain. See, 55, serial number 55 is the current, yesterday end of the day, this demand zone is the most recent demand zone to the current closing price. But we don't take trade in the demand zone. We always look into the high liquidity demand zone. Where is the next high liquidity below this 55, serial number 55? Immediately the next demand zone itself. The high liquidity demand zone. And this zone is already tested 18 times and 14 rejections from this zone. That means nearly 14 times this zone is tested. And this is the zone you can plan your trade. What is the characteristics of high liquidity zones, especially 5 minutes high liquidity zone? Until the zone is violated, we can plan our trades and we will enjoy our profits. The day when it is violated, definitely our stop loss will hit. But we have to prepare for that. Because high liquidity zones will give you so many tests, multiple tests. And today also it gave you the test. First of all, what is this high liquidity zone? The serial number 56. This is having zone achievement, violated opposing zone, and leg out with high explosive candle. All these are all favorables. And the 17th, and moreover the 15 minutes trend is sideways. They are all favor, not downtrend, right? But anyway, even downtrend, we are in the buyer's area. We have higher chances to get success. See, 17 to 1020 is our zone, 2 base candles. 17th February 1020 candle is the leg-in. See here. This is 17th February 1020. We have a leg-in candle and we have 2 base candles and then we have a rally candle. This base candle is also medium size. This is also medium size. Our software have considered. This is the base candle. You have one more base candle. This is the tiny candle, small candle. And then a rally candle, a very big candle. And follow through candles are there. So this is the zone. You have to plan your trade. Then what about your target? Your target is a 15 minutes target. Is there any 15 minutes target is available? Yes, we have a rally base drop is there. Actually, next target it reached. See here, you have a drop, 1, 2, 3, 4 base candles, drop. This one is also achieved. See? But anyway, so this is the area where your first target is achieving. If anybody used a trailing stop loss, 5 minutes trailing stop loss, you might have got even a better profit. But this itself is good enough. Rally base drop. And this is also strongly holding the prices. See, already tested once and second time. Maybe today it is violated. But anyway, this is our 15 minutes target. There are no more 15 minute zones after that. You may say here, can't we draw a 15 minute zone here? Actually, see, the origin is, this is the 15 minute zone. Mostly from the origin it will reach. And this is the area you need to plan. But the biggest problem here is you don't have 1:3 RR. See, what is the RR you have initially? 1:2.29 RR you have. This is the type 2 proximal of 5 minute zone. So that's why what I did, I took a little inside, I fine-tuned the entry. See, instead of here taking the entry here, I fine-tuned the entry up to here. See, up to here we are getting 1:3 RR. But what is the risk involved in this fine-tuning the entry? Sometimes prices may not reach our fine-tuned entry. Before itself prices enter and then started moving up. That way you will be missing the trade. But luckily today you see, prices entered into the fine-tuned area, morning at 9:16 candle. 9:15 candle trades, of course, we don't consider. But 9:16 onwards, okay, it is a valid trade for us. Prices entered here. I will show you in 1 minute time frame also. We got the entry and then started moving, finally reached the target. When it reached the target at 9:45, 5 minutes candle. Let's go, 15 minutes candle. Let's go to the 5 minutes time frame. So this is the candle. 9 o'clock, 45 minutes of 5 minutes candle, it reached the target. So in less than just 30 minutes, your trade is completed. 1:3 RR is achieved. What could be the profit? What could be the ROA? Let us check. Let me open zero the margin calculator. Nifty 50. So Nifty 27th February 2025 futures I am taking the expiry date. So what is the lot size? 75. Okay, what is the margin cost? Okay, at the time of closing the price it is 1,95,000 and the value will be lesser at the time when you take the trade. Approximately we will guess the value and we will do the calculations. But total lot size is 75. Okay, before you accept the trade, what is that you need to calculate? Before prices reach here, see, this is your entry and this is your stop loss. Till here, the risk should be less than 2%, less than or equals to 2%. You cannot accept the risk beyond 2%. Maybe you can accept, but you have to do position sizing to reduce the risk. That way also you can plan. Those who may have fear that this entry we miss, then you can take in the type 2 proximal itself you can take. But you have to do position sizing. When you do position sizing, taking trades in the futures is not easy for retail traders like us. So you have to take in cash segment. Intraday cash segment you can take. Whatever the margin broker is giving, you can't utilize the whole margin. You have to position size whatever your risk, that much risk level only you can. But anyway, here I have fine-tuned the entry up to here. Do we have a risk within 2%? What is the risk involved here? Let us calculate first. See, this is your entry and this is your stop loss, including stop buffer. This is your stop loss. So let me deduct both these values from entry. Entry value should be subtracted with stop buffer value. So what is the entry value? 22,816.75. So let me open the calculator and show you the calculations. So see what you have to do before you plan your trades. All these steps you have to do. And moreover you have to do before planning your trade. Quickly you have to do all these calculations. So 22,816.75. Anyway, these calculations you would have done before market starting itself. Because 15-minute zone is already available before market starting. Already we have our software report already displayed this high liquidity zone. And you keep stop buffer values. So stop loss value is 22,768.10. So how many points risk you have? 48.65 points. That means close to almost 50 points risk you are expecting. 3 times reward means close to 150 points. Actually, it is 146 points or something it has given, because 48.65 into 3 you have to do, because you are taking 3 times reward. Okay, first of all, risk, is it within 2% risk? So 46, what is the lot size? 75 into 75. That means if your stop loss is a hit, Nifty, you should lose the value 3,648 rupees 75 paisa. So that means approximately 3,650 rupees you have to lose your money. If you get profit, 3 times the profit you will get. Maybe around 10,000 plus profit you will be getting. 3 times means maybe 10,600 or 700 you will be getting the profit. So it's a very good rate. But this risk should not be 2%. That is very important. Okay, further you need to check this margin value. What is the margin value? Current margin is 1,95,250. What is the current close? See the chart. This is the current close. But you would have taken your trade somewhere here. So that means when prices were here, definitely the value will be, your margin value will be reduced. When prices are going up, margin value will increase. Your investment. So here maybe I can say, maybe because it is almost close to 2 lakhs, when the prices are here, maybe some 100 points might have been down. That means approximately another maybe 700 or 800 rupees less margin will be there. Say, let me say approximately 1,94,500 rupees, approximately. Maybe some 100 or 200 rupees difference will be there, plus or minus. Okay, I am taking approximately 1,94,500 could be the risk, could be the margin value. So this is your loss. So how do you calculate ROA? So this loss or profit, whatever, into 100 divided by your one future's margin cost value. So the margin cost at the time price entered into the zone could have been 1,94,500. See, which is 1.875. That means close to 1.9%. So that means we are exactly within our 2% risk management. So definitely we can accept this trade. Maybe those who can't accept even this up to 2%, some people say I don't take risk beyond 1%. Maybe today you might have missed this trade. But to those people who accept the risk up to 2%, today you would have got a very good trade today. Because it is within the risk management, fine. Then what could be the profit? So your profit is your profit minus your entry. What is your profit level? 22,963.35. Minus, what is the entry? 22,816.75. How many points you would have got the profit in Nifty? Within half an hour, you would have got 146 points profit within half an hour. First half an hour. 146 points. Into lot size 75 here, right? See, close to 11,000 rupees profit you would have got. 10,995. So almost 11,000 rupees profit. What is the ROI? Into 100 divided by, we said 1,94,500, right? The same value we calculated for loss also. So at the time of entry, the value could be around 1,94,500. You got 5.65. That means 5.7% ROI you would have got. 5.65 round value, 5.7. So it's a very good intraday ROA within just 30 minutes. Who helped you to get this profit? Our Nifty supply demand zone chain. This is the reason why every day I am providing Nifty, Bank Nifty supply demand zone chain. You know, the supply demand zone chain reports are a very highly expensive service reports. New app, we are providing different services, paid services. Supply demand zone chain is a highly expensive service. For a single script to get supply demand zone chain from monthly time frame till 5 minutes time frame, those reports we are charging for one day, we are charging 1,000 rupees. That means every day we are giving Nifty, Bank Nifty as part of the report. That means 2,000 rupees already you collect, the money you are spending for these reports. This is single day. Approximately 20 trading sessions, say 20 trading sessions you are getting. Maybe 22 will be there, but 20. 20 into 2, 40,000 rupees worth reports every day you are getting in our premium subscription by paying just 5,000 rupees. Of course, you are also getting other reports. High liquidity zones, daily and 75 minutes high liquidity zones. Next, bullish and bearish trade setups for all the 4 income trades. Price closed inside the zones for all the higher time frame zones. Further filtered with EMA confluence. So that's why I told you the 5,000 rupees what we are charging is a very, very small money. You don't really understand its value. See, somebody who is doing Nifty, Bank Nifty, they would have paid 5,000 rupees for taking the monthly subscription. See, in this trade, they got how much profit? 11,000 rupees profit they got. So, whatever the 5,000 they paid for our premium subscription, they got that money. Apart from that, another 6,000 rupees profit they got. And rest of the month, these whatever the premium reports they are getting, they are like a free reports for them. Isn't it? The power of the high liquidity zones you have to understand. But remember, one day these zones will be violated. That day your trade should be stopped out. Maybe see today you would have got around 3,000 rupees loss. In case, if the zone would have been stopped out, you would have got 3,000. But that money again you recover in the next day probably when you get the success. But the point you have to understand, the success rate is higher, failure rate is low. I never say these zones won't fail. These zones will fail. What is that I am claiming for these Nifty, Bank Nifty, supply demand zone, 5 minutes high liquidity zones? They have a success rate up to 60 to 70% success rate. Even 50% success rate is a very good success rate in supply demand zone price action. That is what you have to understand. Because we are getting 1:3 RR, right? Even if 50% is fail, remaining 50% you will be getting 2 times profit. Suppose you are supposed to get 3 lakhs profit. 1 lakh rupees is gone because of stopped out trades, 50%. Because of 1:3 RR, still another 2 lakhs profit you will be getting. 1 lakh loss. So this is how we should understand the supply demand zone, price action, high liquidity zones from Nifty, Bank Nifty. So very simple. Immediately the high liquidity zone that gave you very good profit. Yeah. And one more thing. Not only this is one trade I am talking about. Look into this one reached the target, right? Okay. Now again go to this report. What is the most recent, yesterday end of the day, what was the most recent supply zone closed? The 54. This is a TCO zone. This is a low priority, high liquidity zone. But above we have again high priority liquidity zone, high liquidity zone. This is the area, this is a fresh zone. You can go for a short here. Where it is 14 to 1025. 5 minute supply zone. See, this is the 5 minutes high liquidity demand zone. This is the 5 minutes high liquidity supply zone. 14 to 1025. Let me go to the 14 to 1025 in the chart. This is the one. 14 February 1025. This is the leg in. You have a base candle, you have a drop candle. The 1035 candle is the leg out candle. See here, 1035 candle is the leg out candle. Now draw the zone. This is the supply zone. This is a high liquidity zone. As per the high liquidity zone concept, you can go for a short trade here. Of course, these are not the fine-tuned zones, but these are the aggressive trade setup, supported zones. See, this is the zone you got the trade. Maybe it pierced slightly. Definitely it will be within your stop buffer. There is no doubt in that. Maybe your stop buffer approximately, it could be there somewhere here. See, here also you see. Exactly here also somewhere here, approximately I am specifying. Or maybe a little higher also it might be there. After that you see the profit, how much it has given. And where is the 15 minutes demand zone now? The target should be, this is our 5 minutes high liquidity supply zone. From here, the price should reach 15 minutes. First of all, when you got this trade? You got this trade around 10:20. 10:20 you got the trade, 15 minutes demand zone. Any 15 minutes demand zone is here? Let us verify. Yeah, here. But this is violated. There is no 15 minutes demand zone. But this is the 15 minutes demand zone. After you took the trade, 15 minutes demand zone is created here. If that is the case, you have to exit in this zone. Maybe if you are using any trailing stop loss based on 5 minutes, any zones are here. Or at least 1:3 RR has been achieved. Let us see that way. See, this could be one area you might have exited the trade. Because the candle is closed, 15 minutes candle is closed only after you took the trade. Then immediately, it looks like you won't get any good RR. Right? Go to 5 minutes. This zone is violated just like that. Even if you use 1 minute trailing stop loss, also sharply, none of the 1 minute zones are violated. This is the first 1 minute zone is violated here. Rally base drop. Probably somewhere here. Or maybe a little, you may use some buffer here, at least a small buffer. Let us assume at this blue color. How much, at least how much RR you would have been achieved using trailing stop. But whatever RR we have to accept because already it reached the first 15 minutes demand zone. Short position. So calculating RR is meaningless, but just to understand at least how much we would have achieved here. This could be your entry. This blue color line you might have exited because your rally base drop, this is violated here. You got 1:2.41. Or if you want to exactly exit here at the 1:3 RR, definitely you might have achieved. Sorry. See, 1:3 RR. Instead of trailing stop loss is violated, maybe if you would have exited at this blue color line, so by this time it reached 1:3 RR. So definitely here also 1:3 RR you would have achieved. Before trailing stop loss is violated, you might have exited that way also. One option. Those who exit exactly at 1:3 RR, you might have achieved your goal. That is what I am trying to say. And those who use trailing 1 minute trailing stop loss, probably you exited here. Generally, when you will use the trailing stop after achieving 1:3 RR. But the problem is before that we have this 15 minutes demand zone is there. When RR is not there, why you accepted this trade? You may ask this question. Because this demand zone is created only after our trade is completed. Many times what happen? Price reach here. Our trade will execute. Immediately, sharply prices go down. There won't be any 15 minutes demand zone here. Prices will be moving further, go down. Till the next 15 minutes demand zone, somewhere here, see drop base rally is there. Until here it will reach. Okay, this 15 minute zone is violated. Next, it gave you again another trade. See here, once again. Once again it reached the zone. Generally, we know what we do. We keep small entry buffers, right? That way, at least this trade would have been executed. This time, how sharply prices came down. Up to here you have, there is a zone, LOTL zone created here till that the target is reached. See, this is how Nifty, Bank Nifty traders will be playing by making use of this supply demand zone chain, the high liquidity zones. Okay, finally, forget about the profits or what we got here. The most important thing you should observe, today price range is only between this high liquidity demand zone and high liquidity supply zone. Do you agree? Between the entry serial number 53 and serial number 56, whatever you are seeing, the levels you are seeing here, right? The zone high and zone low. Between those levels only today price moved. This is how high liquidity zones will be controlling the prices during the intraday. Of course, there are some bad days will be there. Those days, high liquidity zones, all of a sudden, one or two zones will be violated. A very strong bullish day, very strong bearish day. Trend will be changing on those days, overall market trends. Such kind of situations, you will see high liquidity zones might be violated. But they won't happen every day, rarely, once in a while. That day, many of your stop losses will hit. We have to prepare for that because we know every high liquidity zone will have some expiry period. But only thing we never know when it is going to be. So those days these high liquidity zones violates, some trend changes will take place at short-term trend change base. What I mean to say, short-term trend changes. See, this is how today Nifty traders would have got good profits. See, when the day when you won't get trades, good trades from high liquidity zones, when you won't get trades from high liquidity zone, monthly you will see, some 2 or 3 days you will see. Monthly or once in 2 months you will see, 2 or 3 days, you won't be seeing proper trades in high liquidity zone. That itself, several times I told you earlier also this point, because now many new traders are there, you should understand. When high liquidity zones are not executing for 2 days or 3 days continuously, that means some major shift is going to take place in the market. At that time only, high liquidity zones trades won't be, prices won't be coming into the zones. Adjustment will be taking place, market adjustment. All of a sudden, the adjustment levels will be broken. Then prices will be rallying towards the up direction or down direction. That way prices will be entering into the high liquidity zones. From there again they will be started moving. During the intraday we get good profits. So we have seen yesterday there is no much action in the high liquidity zones. Today also there is no much action in the high liquidity zones. Hoping that maybe you see all of a sudden a shift will be taking place in the market direction. Which side it will shift, that we cannot tell. We are not in a position to predict that. But some shift is going to take place. That is what we can predict. That is what I am predicting by based on these high liquidity zones movements. See what happened today in high liquidity zones. First one is MCX, is a daily high liquidity zone. So this is today's daily candle. Price entered into the zone today, but there are no fine-tuned zone here. Go to the 75 minutes time frame. Today 75-minute zone is created. Yesterday you see drop, base candles are there. This is today's morning candle. Now 75-minute zone is created. Any fine-tuned zones within the zone here, next retracement, they may give you the trade opportunities. But as per our yesterday's analysis, what was our trade plan? Here we have a fine-tuned 5-minute zone. Go to the 75 minutes. Here we have a 75-minute zone. We have a drop, you have 3 base candles, you just add the hidden body. The moment you add the hidden body, it is a rally candle. And a big wick will be there. So that's why this is the 75-minute zone we fine-tuned. Within the 75-minute zone, we have a 15 minutes fine-tuned zone. See here we have a drop candle, failed ERC candle as a drop. We have a base with the hidden body, you have a rally candle. This 15 minute zone again fine tuned with 5 minutes time frame. Go to the 5 minutes time frame and look into the fine tuned zone. I consider this as a failed ERC candle as a rally, then a base candle and a rally. Of course, this candle is also looking like a big candle only. But why I have given importance is near to the zone. When I draw wick to wick, you see, again drop base rally is created. Picked up the orders from this zone. Maybe this could be a high liquidity zone. Anyway, risk management type 2 proximal we have drawn. See, how I am taking the decisions, that is how you should understand. See, last time also prices came but not good enough to get the trade. They didn't reach. And today price entered into the zone but it not entered into this fine-tuned area. Maybe today you would have got a trade from this zone. How? Here you have a 3 minutes high liquidity zone. Let me show you 3 minutes high liquidity zone. Because why I am not concentrating nowadays much on this is aggressive trade setups. Because many people are getting attracted to the aggressive trade setups and making mistakes. I don't want that to happen to you guys. You have a rally base rally. See, from here it picked up the orders. Today it came. Previously, soon after the zone creation. But today, what time? Go to the 1 minute candle. What time they reached here? Today, this is morning 9:16 candle. It could have been a huge profit, right? But why I didn't consider? There are several reasons. So we are assuming this is a high liquidity zone. If it is not high liquidity, maybe today it worked, right? Because it is successful, we are saying, okay, this is definitely high liquidity zone. But earlier, before today, it is like a just tested zone. Today maybe it is confirmed it is a high liquidity based on multiple testing. So that's why I didn't calculate into our statistics. Just I'm trying to show you what really we got. Actually, we got a trade from. This is a high liquidity. Once prices reached the high liquidity, then they are started moving. Forget about your trade for some time. Forget about your trade is successful or not. Forget about whether you properly analyzed it or not. But one point you have to observe. See the prices. Look into the daily time frame. It is, see, the prices are falling. Who stopped the fall? Our high liquidity zone. That is what you have to understand. The real power of high liquidity zone. And so many demand zones are violated here, right? See here, we have a drop base rally is there. That has been violated here. And here also some drop base rallies are there. See here, drop base rally is there. That is also violated here. But here we have a high liquidity zone. This is not violated. This is the one prevented the fall in the market, especially in the stock. Then gave a good movement from here. Once again they came back and once again they moved. Today prices entered into the zone. See how sharply it moved today. Today it has given 198 rupees, 3% movement we have seen in this stock. That movement happened after seeing this high liquidity. How I noticed this zone, some kind of activity is taking place? Because by seeing these rejections. I thought maybe somewhere here, some zone will be here. It got the support. Today also it got the support. If you go further, if you extend, now you see, clearly you see. Now you see. This is a 3-minute zone, drop base rally. And a huge movement from here. Now clearly we accept. Now go to the daily time frame, you will understand. See here, while prices are moving here, the institutions created a high liquidity area. From that area, it is getting the support. Today it gave a big movement. So this is how, that's why rejections always, they give you some kind of message. Rejections gives you message to the traders. If you are able to understand the message given by these rejections, you definitely can get good trades, especially aggressive trades. But your experience is not up to that level. Many people with greediness, okay, let me go to aggressive trade setup, I may get a lot of profit. With that greediness, you may plan your trades. But unfortunately, you make mistakes and your trades will be stopped out. Previously happened with many of our traders. That's why nowadays I'm discouraging you go to the aggressive trade setups. I'm asking you to focus only in the fine-tuned areas in the initial stage. The fine-tuned areas. Once you get experience, then you can focus on aggressive trades. That's why when there are some situations in the charts, I'm trying to give you some explanation about these aggressive trade setups. You see, without listening, some of my experiences or some of my observations, maybe that is the right word, some of my observations without listening, how do you gain your experience? That's why time to time I am explaining. It doesn't mean I want you to take trades at this stage. I strongly discourage you to go for aggressive trades in the initial stage. So my suggestion is go to fine-tuned zones, but observe these things. Once you get experience, once you get good confidence, you can plan your trades. See, my decision is based on these rejections. There is a rejection. Next rejection is it did not go up to here. Started taking. That means there is an order flow in this area. That way how I sensed. Directly I went to the 5 minutes, structure is not clear. Then I went to 3 minutes. Even if you go to 5 minutes, you see the structure, but not so clearly. See here. You have a drop candle, 2 base candles and a rally candle. Because the wicks are very big, maybe type 3 proximal entry, that way you can plan to minimize the risk. See, today prices entered into this area, the 5-minute zone. If you would have planned your trade today, say for example, how much profit you would have got? Let me show you the long position. Maybe some stop buffer, small entry buffer, say for example, up to here. Because none of these zones are violated, 5-minute zones. They were moving. This is the first 5-minute supply zone. It took the support. Again moved from this supply zone again pushed. This time this demand zone has been violated because it is tested one. But up to here, I'm calculating. Today it has given you 1 is to close to 1 is to 6 RR it has given. Till the maximum I'm saying. See 1 is to 6 RR. Of course, you will not keep up to here. Maybe somewhere at the 15 minutes zone, any zone. See here, you have a 15-minute zone here. You might have exited your trade in this 15-minute supply zone. This is our entry. This is our target. This itself could have been a very good profit for you. You get the trades, but the thing is, properly you should assess the aggressive trade setups. Anyway, I am not considering these trades for the performance point of view. Otherwise, this is actually it's a very good scenario. Next one is NCC. This is also a daily high liquidity zone. This is created somewhere some more than 1 year back. You won't get 5 minutes data. That's why I left this zone. Same is the case with RBL Bank also. This is also some 2 years back old 2023 zone, not fine tuned. Next one is Tata Communication is also. It is also some 2023 zone. So we can't fine tune this zone up to 5 minutes. Left it. And next one is Glenmark. This is a supply zone. Already we discussed yesterday. This Glenmark. We don't have a proper fine-tuned 15-minute zone here because of these candles. Yesterday we discussed. So we left this yesterday itself. Same is the case Indian hotels. Yesterday we discussed Indian hotels. This is also not having 15-minute zone here. Candle is closed inside the zone. Yesterday I said this zone will be violated easily. See, that is what happened. Today the zone is violated. And HAL is the one. HAL is a 75 minutes demand zone. It is having a fine-tuned zone, and also it is also having a lower time frame zone also. Let me show you in the 15 minutes time frame, the HAL. See here, lower time frame zone, 15-minute zone, rally, 1, 2, 3, 4 base candles, rally. This is the origin for this entire 75-minute zone. And also 75-minute zone also we have, you see rally, 1, 2, 3, 4 base candles, rally. So both these 15-minute zones are LOTL zones. The fine-tuned 15-minute zone and lower time frame origin, both are LOTL zones. But we should look for fine-tuned 5-minute zones. Two fine-tuned 5-minute zone. One is within the fine-tuned 15-minute zone and another one is a lower time frame 15-minute zone. Lower time frame origin 15-minute zone. We have 2 5-minute order flows. See, this is the one. 5-minute zone. Rally, base, rally. Fine-tuned 5-minute zone. And what about this is also fine-tuned minute zone. Drop, 3 base candles and rally. So this is a fine-tuned 5-minute zone inside this 15 minutes horizon. And today prices picked up from this horizon. See here, it picked up from this horizon how sharply prices moved up. But before that this 5-minute zone is violated, right? Fine-tuned 5-minute zone. But I am not considering both. Why? Because both are happened in morning 9:15, 1 minute candle. Go to 1 minute time frame. If it is 9:16 candle, we would have considered this trade. But already this is violated in the morning 9:15. Same 9:15 minute candle after reaching it moved. 9:15 we can't predict. It is completely unpredictable. Getting trades or execution of the trades may not happen many times in 9:15. That's why we took a decision. 9:15 trades we don't consider for the performance of our high liquidity zones. Whether it is successful or whether it is topped out, we don't consider. 9:16 onwards only, we consider them as a successful or failure trades or stopped out trades, what I mean to say. But today, after that, moved, but we can't consider. So this is what happened in HAL today. And Paytm. Paytm is a 75 minutes high liquidity demand zone. Here it is created. We have a fine-tuned zone here. How our software identified? Rally, base candle, medium size candle is also part of the base, and then a rally candle. And this one we fine-tuned with 15 minutes time frame. We have an excellent 15 minutes fine-tuned zone here. Where is it? Okay. See here we have a drop, you have a base, and then we have a rally with hidden body. Drop, base, rally. And this 15 minute zone again fine-tuned with 5 minutes time frame. See here, rally, base, rally with hidden body. We have a rally candle, we have a base candle with hidden body, a rally candle. But today prices reached here? No, they didn't reach. Do you remember you learned a concept called entry buffer? Actually, this zone is having an entry buffer. Here the zone is not clear, right? But here you have seen rally, 1, 2, 3 base candles and a rally candle. You draw the zone here. This is acting as a dynamic entry buffer. And there is a concept called dynamic entry buffer concept explained in lesson 21. See, this zone is tested. These dynamic entry buffers won't let the prices to reach until it is violated. See, recent time, how many times this entry buffer holding the prices? This is the, see, earlier at the time we drawn the zone, we have seen first time it was tested. Now again second time, again third time, again fourth time. Yesterday fifth time, today sixth time. After that you see how it moved. Why we didn't consider? Is it 9:15 candle? Go to the 1 minute time frame, you will get clarity. See, this is 9:16 candle, 9:17. Definitely we would have taken a trade here, right? But why we are not considering? See, 9:15 candle, this is pierced. Pierced means this order flow is gone. This is no more valid for us. Once it is not valid, next candle, how can you take the trade? You can't take the trade. Today this zone is pierced. That means the entry, dynamic entry buffer order flow is gone today. That way you can't take this dynamic entry buffer trade. Maybe after that it moved very fast. You may feel, okay, I missed this trade, I would have taken this trade. That way you may feel. But we have to follow our rules strictly. Today it happened that after pierced again prices moved, but it won't happen every time. Maybe many times after it pierced, prices get into the zone. Probably the fine-tuned areas they may go, and from there it will move. Looks like it gave a very good trade, but actually in reality you can't accept this dynamic entry buffer trade. But remember, these are all the examples for you to learn these concepts. And the last one and the most important one, TORNTPHARM. Why there is a difference? Look into the 75 minute zone. How the 75 minute zone looks like? See, this is a drop candle. How I am supposed to draw the zone? Like this, right? This is a drop candle, failed ERC. We have 4 base candles and a drop candle, and this zone is pierced, but our NeoStock software did not give this zone as a pierced zone. Is something wrong in our software? That is the doubt you might be getting. Or is it something wrong with your trading view? That is also another doubt we may get. It is not about trading view is wrong or our software is wrong. It's not about that. It is about recently changed rules. Recently changed rules pre-market open also they are including in the morning 9:15 candle. Go to the daily candle in TradingView, you will understand. You see, the daily candle zone is up to here. That's why initially I have drawn the zone up to here. See, it looks like the zone is up to here when you draw the zone, but I have drawn a blue color line. Have you noticed? I have drawn the zone up to that particular place. Why up to that place? Because the zone high and zone low in our software describing this. Our NeoStock software has given. Why our NeoStock software has given? Because this is the morning 9:15 candle leg out. The leg out candle pre-market, it's shown, it moved up to here. This is the open, pre-market open, the blue color line. That you see only in the morning daily candles in TradingView. Other than TradingView, remaining all data providers, they are considering the pre-market, whatever is open, that same open even in the intraday candles. But TradingView is considering 9:15 whatever the price, that price only they are considering in the intraday candles. But daily candle, you see, daily candle open, this candle open is from this blue color line. That is what our software suggested. But you go to the 75 minutes, see, the candle open is here. Sorry, this is the candle. The candle open is here. But actually daily candle open is at this blue color line. That's why it is a big candle. Okay, anyway, whatever the software the data we are getting, that data, morning intraday candles, morning 9:15 open is nothing but intraday price open. So that's why it is up to you whether to consider this as your zone high or this as your zone high. If this is, you feel this is violated, leave it. If you, anyway, in our software, zone high and zone low I am providing. So whatever the zone high, there you draw a blue color line. Till then you drag the zone. What is the advantage you get? According to our software, this zone is still a valid zone. See, in this candle, suppose if prices while going, any new zones are created, we get trade opportunity in that. But today in this stock, we identified this zone will be violated because 15-minute structure is not good. See here. 15-minute structure is not good. Why? It is a drop candle, another drop candle. Even if you go to 5 minutes, clearly you see, much clearly here. You see? You have a drop candle, failed ERC, you have a drop candle, no base candle. What will happen? This zone will be violated easily. That is what happened today. The zone is violated. Let us assume here you have a fine-tuned 5-minute zone. There are higher chances this zone works because our software is calculating the high liquidity zone related characters based on these statistics by assuming this is our zone high. Let me show you in daily. See, this is the zone high our software calculated here. Next time when prices came down, any new order flows created, we would have got a good trade today. But we know this zone will be violated because there are no 15 minutes zone. Previously prices reached up to here, came down. There were no 15-minute zones. So this is the only point you should remember, especially the difference between TradingView software and NeoStock data, what we are using. So at present, NeoStock data is using morning 9 pre-open market data as it's open for all the 9:15 candles, intraday candles also. TradingView is using pre-open only for the daily candle. They are not using for remaining intraday candles. They are not using pre-open as a open for 9:15 candle. They are not using. That is the only difference. Because of the difference, you see some charts sometimes. Even future also you may see some differences for some charts, not every chart. So at the time, what you can do, immediately look into NeoStock software zone high and zone low columns in our report. We have 75-minute zone, stocks near 75-minute supply zone. See TORNTPHARM, the TORNTPHARM, are you seeing the zone high and zone low columns? See TORNTPHARM, look into the zone high. What is the zone high? 3,107.90 paisa. That is what you are seeing here. This zone high, what level I adjusted? 3,101.90 paisa. 3,101.90 paisa. And go to the daily candle. See the daily candle, what is the zone open of this candle and high of this candle? See 3,101.90, observe here when I place my mouse. Now you observe there 3,101.90 paisa. So morning daily candle trading view considered, but when it comes to the 75 minutes intraday candles, it did not consider the open. This as the open, it did not consider. That's why when you are drawing the zone, you feel like it is the zone is already a violated zone. I mean a pierced zone in this case. But actually it is not when you consider pre-open market. Which one we have to follow, this approach or which is good, that is a debatable. See, pre-open, maybe a lot of order flow might have been there. That order flow might have pushed the market down when it is opened at 9:15. That means if the order flow is still exists, what happened next time? Again prices will go down. Maybe that could be the reason. See, the candle again came down. But while it is coming down, there is no proper structures are created. We are believing this zone will be violated, and that is what happened today. The zone is violated. Hope you got the clarity. That's why NeoStock software, whenever you refer, look into the zone high and zone low columns. They will be helpful to you. Whatever the zone high value is there, what is that I did? I drawn a blue color line exactly at that line. Till that line, I just adjusted. Initially, my zone is like this, according to TradingView, but according to NeoStock data, I just adjusted my zone up to this blue color. I kept it like this. Then I try to fine tune the zone here in this price action. The moment I went, I am not comfortable with this structure, so I thought this zone will be violated. That is what happened today. Hope I made it clear. So please take care of this limitation in the coming sessions. Hopefully TradingView also will change the same view in the coming days. Probably some of you raise complaints to the TradingView or a request to the TradingView. Probably they may adjust intraday related 9-15 minutes candles also with pre-open market. Okay, this is about today's analysis. Hope this information will be useful to you. Let's all meet again in our next video. Thank you.